In this video, I'm going to discuss why deep learning neural networks don't work in Forex trading or in trading in general. There are two types of trading: discretionary trading and system trading. Discretionary trading means it's on the discretion of the trader whether to take the trade or not. Discretionary trader mostly looks at the charts and develops a gut feeling about the market and makes decisions on his gut feelings, whereas a system trader develops a system that may be a statistical system or a deep learning neural network that looks at the past historical data and then makes predictions about the market. Discretionary trading is difficult. Out of 100 traders, only 2-3 traders ultimately succeed in making money. But if you succeed as a discretionary trader, and you can make far more money as compared to a system trader. Richard Dennis was a system trader, but traders like Bruce Kovner, who made billions, were discretionary traders. In this video, let me show how why deep learning neural networks cannot predict the market with much accuracy. In a financial market, there are so many variables they are affecting on the price. And one of the most important variable is breaking news or news. Financial market is sentiment based in the short run. Fundamentals don't count in the short run. It's highly psychological in the short run. Fundamentals count maybe 6-7 months, 12 months. So this is the time when Bank of Japan is about to make announcement about its monetary policy. In December 2022, Bank of Japan announced that it will target 10-year treasury Japanese government bonds and bring down their interest rates. Now this is January, and you see, last many hours, market has been reaching. This is the support level. This is the resistance level. Market found that resistance, and this is just half an hour before this. On the right, half an hour is left before the announcement, and you are not sure what the market will do. What will be the announcement? What will be the reaction of the market? Went up, now it's going down. Now, Bank of Japan makes the announcement that it's not changing its skipping the policy announced in December, so there is no change. And you see, market reacts. And look, yes, there's no change in policy, but the dollar yen starts rising, goes up, yen gets weak, and dollar yen starts rising. It goes up, 28 to 130, like 300 pips After that, this is all sentiment based, initial reaction of the market. At this point, market participants now know that they are overreacted. So they start finding resistance. And it's very beautiful candlestick pattern, reversal pattern is formed. And now you see opposite movement. Now price dollar yen starts falling and goes below this support level. If you have been using a deep learning neural network, deep learning would never have predicted this much volatility, this much movement, and there was no way that it could have anticipated what the Bank of Japan is going to announce. And Bank of Japan just said that we are not changing our policy, and you see the market reacted in a very market reacted its own manner. First, it overreacted, price shot up with a low time. This was overreaction. Then, when the reality sets in, then this selling starts, and after that, you see then the reality sets in. So if you think that neural networks will give you the edge in trading, and then you should think twice. The best way to go forward is to become a discretionary trader.